abroad, Bharat Madan, whole-time director and CFO at Escorts Kubota, to talk about how their quarterly performance has been. Bharat, great to have you on ET Now as always. And I was just going through your performance. It's turned out to be a little bit of a mixed bag. While your top line has been in line, your margins have dragged. They've dented your EBITDA this time around, but PAT has been aided by higher other income. Tell me what really transpired in this quarter, which was marred by so many unknowns and so many volatilities.
I think the positives seen which we looked at was the industry numbers, but the industry continued to show good momentum. So in spite of the negative guidance around the monsoon from both IMD and SkyMate, I think the expectation was clearly the sowing will happen on time, and I think the farmers continued the buying on the tractor side. And a bit of this was also aided by the GST cut which happened last year. So obviously with the lower prices, the affordability for the farmers was better. So we continued to see that continuation of the buying till end of June. And luckily for July, because the monsoon got extended this time, it was a bit delayed. So the sowing also got extended. So the July also continued to do well. So you saw the July number also were quite good for the industry. And our volume also went up almost by 23%. So I think the first 4 months have been good. I think from the rural side. Yes, there have been pressures on the commodity cost side because we see in the geopolitical situation, which is quite volatile. And because the growth has been very good. So obviously we not taken a call to really pass on those cost increases to the market yet. We took one price increase sometime in the middle of April, which was about 1.5%, which is a very nominal price increase. Obviously, looking at the situation which is today, and I think we are contemplating to do another price hike. With the quantum and the date is not yet decided, but definitely it will happen sometime in this quarter.
Hi, morning, Sajid here. Especially from the commodity point of view, rubber and steel prices have gone up, and that's a major chunk for you. And you said you've taken only one. What could be the expected price hike? And do you see enough, stability in this market to absorb that price hike?
So that's the balance which we need to do because ultimately you cannot expect to pass on the entire cost impact to the market because the customer will not be ready to take that sort of impact, especially the demand growth which we have seen coming up after the GST cut. That will not get negated if we do too much of price hike. But at the same time, the expectation is also that the this situation on the Middle East front, in the Western countries, I think this will really get streamlined. And hopefully, I think in another 3-4 months, we'll see the reversal of the commodity costs going down. So that's why we'll have to get a balance and see what the pricing increase you're taking, which is a sustainable pricing increase that can be absorbed by the customers without impacting the demand negatively.
Is there a threshold or some back of the envelope calculations about how much of a price hike could be absorbed by the market easily that you've done?
So maybe it will be in the range of 2 to 3%, depending on model to model. That's the sort of expectation the market has today.
Your agri-EBIT margins, Bharat, they were compressed by about almost 180 basis points, right, in the Q1. At what commodity cost level does the business become margin accretive? And what's the realistic timeline for recovery then?
So if you look at the Q1 numbers, I think our commodity costs had gone up almost by 5%. And a bit of it was also impacted because of this increase in the minimum wages in Haryana state, where our factories are situated and most of the vendor base is situated. So that itself was more than 1% impact, which probably will not be faced in the others in the industry. So these coupled with this, obviously this got negated with the operating leverage because the revenue growth which we saw happening in the first quarter and a bit of price increase, I think, which was taken. But now we think with the second price increase and in another 4-5 months, we expect the commodity pressure should start coming back and we'll see the reversal happening. So maybe in the Q4, you will see again a positive momentum and the reversal of commodity costs will start happening. And hopefully by when we exit this year, we should be back to the normal margin level, what we saw in last year.
Off with a very muted growth expectation for tractors in this year, FY27. And then because of the demand and the kind of sales that's happening, we've seen a mid-single digit growth coming back. So industry has upgraded that growth. Are you going to be following that growth trajectory, or are you going to, be exceeding that growth for the from an industry point of view?
So industry, obviously, we have also upgraded the guidance to mid-single digit now. So earlier we mentioned plus minus 2-3% for the industry, because we are not expecting that Q4, the first Q1 will be as good as I think the way it has gone now. So obviously going forward, we expect with the base is very high. And again, the monsoon distribution will remain a key monitorable, how it really happens. So we'll have to really be cautious on that front. And this time the season is a bit delayed, so Q2 obviously will be slightly lower, and but the Q3 retail will be very strong. So we expect Q3 should be exceedingly well. But again, we'll see some softness happening in the Q4 because of high base effect again. So I think we'll have to really wait and watch and see how the trend goes. Maybe after the monsoon season is over, we will have a better, idea about the harvesting which will happen, the kind of sowing which has happened now in the Kharif side, and what sort of yield you really get. So maybe October, November, we'll be able to maybe again relook at the guidance what we given for this year for the industry.
And from an export point of view, what is the kind of growth that you're penciling in for yourself?
So export first quarter obviously was a bit down because the demand for the lower compact tractor globally has been down, and that was the major area where we're exporting. But we expect this year we'll again end maybe on the overall numbers on a flat number compared to last year. So we did I think about 6,600 tractors export last year. We'll end up with a similar number this year too. But from FY28, we expect the good pickup is likely to happen because we'll open North American market most likely. And with that, I think the numbers will start going up significantly on exports.
Will August and September be a better month for you from a base effect point of view because of the GST that came in last year?
No, so base is actually very high in August and September. So last month, August saw almost 30% growth and September almost 49% growth. But September also saw very high growth because the festive season had started in September, and September, October, the two key months last year for the festive season. But this time the festive season delayed to October and November. So September will be a softer month compared to last year, and August probably can be flattish or slightly better than last year.
And from a capex point of view, what is the kind of capex that you're penciling in for FY27?
So our capex is divided into two parts. One is the normal capex, which will be roughly 350 to 400 crores, which is the normal which we do every year. Mostly we focus on the product side. And then we'll have the capex related to the greenfield facility, which we are setting up in UP. So there we have earmarked about 500 crores this year. So most of it is already been spent on the land acquisition, and there'll be some work which will be happening on the land leveling and the boundary sector making, and the main construction activity will start next year. So this year we can say about 850 to 900 crores of capex overall will be there between these two projects.
Right. Bharat, so good chatting with you. Thank you so much for your time today.
Thanks, Aisha.